accrual basis, meaning that some assets and liabilities may be recognised, but not all of them. And by accrual, we mean that economic events and transactions are recognised when the event occurs. So, for example, when a service is provided, you recognise it at that point, not when the cash is paid. And in accrual accounting, assets and liabilities, all assets and liabilities are recognised. So we set out those three bases in the chapter, and what we do is we compare the advantages and disadvantages of each in terms of how they meet the guidance objectives that I talked about in the introduction. This analysis acknowledges possible challenges around existing knowledge and capability to use accrual-based standards, but also the potential for complexity that might come from it. And also recognise, I think, as you've all touched on, is that many donor reports are not on a full accrual basis. So the chapter explains, however, that accrual accounting is internationally recognised as the best basis to provide a comprehensive view of an organisation's financial performance and position. And through that, we think that improves quality and transparency of financial reports and enhances accountability and decision making. So that's in a nutshell what we discuss about accrual-based accounts. In this chapter, we also have a second premise, which is about non-financial reporting, and that the guidance will include this. Arguably, this is more important for non-profit organisations than for other types of entity, as it provides an opportunity to explain more about what the organisation is delivering that wouldn't necessarily be found in the financial statements. So non-financial reporting might include areas such as an entity's nature, i.e. what it does, the purpose of the organisation, its objectives and forward strategy. It might also look at its risks and regulatory compliance. It's also an opportunity to set out the impact of the projects and programmes and the wider activities that it's making that may very well be important for that societal accountability that we talked about in the last topic area. So non-financial reporting can provide context to financial information, and it can provide additional information about the organisation's projects, programmes and activities. And as I said, this may be useful in meeting the broader needs of stakeholders. So these are the two premises that are set out in chapter 3 of part 1 of the consultation paper. And so I'm going to move us now back into breakout groups to have a discussion around those two areas. And the questions that we've got for this topic area are about what accounting basis for general purpose financial reports are used in your jurisdiction and who sets these. How do you think accrual accounting could support and improve accountability and financial management? And what requirements exist for non-financial reporting in your jurisdiction? So as before, you'll be automatically sent out into your breakout group. And similarly to last time, you'll have 20 to 25 minutes to have a discussion within your group before we bring people back. So I'm going to stop sharing and give Sigandhi the chance to push you all back out into breakout groups, and we'll see you back here in about 20 to 25 minutes. Thank you very much, Sigandhi. So again, I hope you had some good discussions in your group, and we'd like to hear back some of the key points that came out of those discussions. So I'm going to start this time in the other order. Sarah, could you introduce your spokesperson and the question that you were tackling.
Almost got caught up on and not unmuting myself then, but thank you, Karen. What we discussed in our group, in group 1, was what is the accounting basis for general purpose reporting for NPOs in your jurisdiction? Who is the regulator that sets this? What are advantages and disadvantages of your existing general purpose financial reporting guidance? And that was Anwar that agreed to speak, and thank you very much, because we covered a lot of ground.
Great, thank you. Anwar, would you like to turn your camera on, and thank you. Oh.
Okay, very good morning and good afternoon. Thank you in our group. I think there is a deep presentation in our group and everyone participated on each point. The greater discussion concentrated about the accounting basis because the actual accounting, most of the organization, especially Pakistan, they already shared, Afghanistan also they shared, and Kiran from India, they have shared. So in terms of accounting base, the conclusion or discussion was that the actual accounting is the basis which actually give a comprehensive picture of the organization. But the current regulatory framework is a mix because the organization, especially in the project management, they are doing totally cash basis accounting, and in corporations, some of the regulators, they actually bound them to prepare some sort of general purpose financial accounting on a mixed basis. It's not fully actual or it's not a fully cash basis. But the interesting is that in Pakistan, especially there, most of the non-profit organization is regulated by Companies Act. Companies Act registered for not-for-profit organization. So they are actually applying the SEC rules and regulations. So it means their general purpose financial statement is more or less regulated. But when it comes to the Bangladesh, we had a broad discussion. Our general purpose financial statement we are regulating. The NGO Affairs Guru, they are regulating. And so in that sense, whether NGOs are preparing the financial statement for the project or for the donor does not matter. It is independent, but they have to prepare at the end of the year a general purpose financial statement considering all the activities related to that organization. Plus in NGO Affairs Guru, they also bound that it's in his project yearly you have to prepare a financial statement based on the NGO Affairs Guru regulations. The question is, in Bangladesh, certain big organization, not-for-profit organization also registered under the Companies Act. So those who are registered under Companies Act and as a not-for-profit organization, they are following Companies Act, and accordingly they are preparing the annual financial statement audited by a chartered accountant firm. Also, they are submitting the annual return to the joint stock companies. The second point also came, the interesting discussion was concentrated about the regulator, which even in the last session, there was a discussion that is not clear actually, who will actually govern the non-profit organization. In Bangladesh, even in India, in Pakistan, even in Afghanistan, and also we didn't have any Nepal statement from here, but same thing, that in each country, there are, in Bangladesh even, which Mr. Azhar also mentioned, there are maybe 30, 40 regulators, but there are 4 or 5 is a major regulator. In Bangladesh, the major regulator is NGO Affairs Bureau, Joint Stock Company, Macrocredit Regulatory Authority, Ministry of Social Welfare, Ministry of Cooperative, and so on. So in that sense, we cannot say there is only single regulator. In India also, there are 4 or 5 major regulators. In Afghanistan also, there are 2 or 3 regulators and few they are thinking. In Pakistan, more or less, I think more or less streamline the NPOs. So now come to the conclusion of the basis of actual basis accounting or cash basis accounting or mix, which is modified, you can say modified. We can say for the better governance or NPO, the we have seen that the advantage is actual basis accounting. The greater advantage is that whether it is regulator, whether it is donor, or whether it is society, if you prepare actual basis comprehensive financial statement, at the end of the year, you can see the real picture of the organization, including the assets and its current value. So our group more or less agreed with the recommendation made by Humantum among CFA in their consultation paper that there is a greater advantage of actual basis accounting, and also the disadvantage, not disadvantage, the complexity of actual basis accounting is that for the mid SME and down to the SME, a small organization, maybe actual basis accounting is a costly because they do not have that level of ERP system and also manpower. Because if you really want implementation of actual basis accounting acceptable to the all stakeholders, you need a modernization of the system, which is costly. Cash basis accounting, the greatest advantage is it is simple and easy. People can prepare, and medium size and they always prefer cash basis accounting. Plus some of the donors, they also feel that, okay, do the cash basis accounting because it is a grant, so people are preparing the cash basis accounting. These are the discussion, but one of the point we want to add, because in the consultation paper, it is already mentioned that the actual basis accounting will give you a real picture of the financial health or financial information, including the assets, but it is not giving you a non-financial information. In NGO sector, all the regulator actually now mostly in giving the importance to the non-financial information. So one of our recommendations should be that the corporate governance audit or corporate governance checklist should be included along with the actual basis accounting, so that the auditors in their annual report or the NGO in their annual report, they can check the corporate governance checklist. Why I am telling that? The important is that the assets, some of the assets in the company or in the NGO, we can see that it is recorded in the name of executive director or country director, this and that. So I think corporate governance checklist should be added, part of the annual report of the actual basis accounting. And this is our recommendation in our group, because we are in the favor of actual basis accounting. So if I have missed any point, may I request my group member to supplement to the plenary session. Thank you, Sarah, and our group member. I think we had a very interesting 23 or 24 minutes. Thank you all.
Thank you very much. And if anyone wants to add, if they could do so in the chat, that would be great. If I can turn to Joyce next. Thank you, Sarah. If I can turn to Joyce.
Thank you, Karen. In our group, the question was, what requirements currently exist in your jurisdiction for non-financial information reporting? And we have Homia, who's going to summarize the contributions that everyone made. Homia, please go ahead.
Hello, everybody. As Joyce said, I will summarize what was the basis of our discussions. In case I miss something out or I state something incorrectly, I request the other group members to correct me. Our first question was, what are the requirements that currently exist in your jurisdictions for non-financial information reporting, whether required by regulators, donors, or others? The consensus over there was that in none of the participants' countries is there any requirement for non-financial reporting. Yes, non-financial reporting is done on a voluntary basis. Non-financial reporting may be done on the donor's request. In India, to a very limited extent, there is some part of non-financial reporting under the Bombay Public Trust Act and under the Income Tax Act. But besides this, there is no regulator which requires that there should be non-financial reporting. Having said this, there are no standards or guidelines for non-financial reporting which have been laid down. The second part of the question is, what are the advantages and disadvantages of existing non-financial information reporting arrangements? Here again, it was more or less widely agreed that yes, if there is non-financial information which is imparted by the NPO, it becomes very, very useful to a donor, a non-accounting person, to a regulator, etc. Now, how should this non-financial information reporting be done? Should it be done by a prescribed set of standards? Should it be done merely by having a guideline? This is a question which needs to be decided upon. Generally, it was felt that it should be more like a guideline, and each country should be free to turn around and report based on what its regulators or donors turn around and require. As the disadvantage of non-financial reporting is, as one of my colleagues who was in audit pointed out, that a lot of people who look at the reports of NPOs are non-accountants, and being non-accountants, they may not be able to follow the financial statements. So if there is a supporting document by way of non-financial reporting, which may or may not link the financial reporting to the non-financial reporting, would be very, very useful. This is a summation of what was discussed. I'm open to any corrections, if any. Thank you.
Thank you very much, Hemia. That was very, very succinct, and it was a very clear report back from your group. So thank you very much, and to all the members of that group. And if anyone wants to add anything, please feel free to put that in the chat. I'm going to turn to Nazir next. Nazir, could you?
Our question was, how do you think accrual accounting could support and improve accountability and financial management? And Rafiqul will give a summary of our discussions. Rafiqul?
Thanks, Nazia, and thanks my team to give me the opportunity to say something about or summarize the discussion we had. Our question was, how do accrual basis accounting could support better financial management or improve the financial systems? So our discussion was covered from the experience, Bangladesh, Pakistan, India, Sri Lanka. If I miss anything name, so you can add. And the discussion was, there was in many countries, there have no specific guidance for NPOs or framework to support or to prepare the financial statement following the actual basis or cash basis. Mostly our discussion found that in Bangladesh, NGO Affairs Bureau followed the cash basis accounting, and in India there is no mandatory requirement to follow the actual basis accounting or cash basis accounting, but usually they follow the cash basis accounting for all NPOs. That was the discussion. And the second part of the discussion was what challenges to follow the actual basis principle. So in this discussion, my team was suggested that the most challenges to maintain the parallel activities, like the government is required in Bangladesh to follow the cash basis accounting, and donor is support, or donor or accounting principle is support to follow the actual basis principles. So that is complicated or challenges to follow. And there was another discussion. The challenge to follow the actual basis principle is lack of staff capacity to implement updated policies or compliance following the both fault, like government and donor agencies. Another one discussion how to we advocate to the government or regulatory authority, or what was the current regulatory framework. So that was the discussions how we advocate to the government to follow the equal basis principle. So that needs to the change the government rules and regulations, and the benefit of to follow the actual basis principle. So that's the advocate agenda to the government, the how the organization or NPOs can benefit it to use the actual basis principle. And that's the issue, and the orientation or awareness to be driven for following up, or the government can set the one one-sided like actual basis principle to implement the NPO sectors. I may wish to have the discussion, or if I miss anything, anything you can add from my team. Thank you so much.
Thank you very much for that. Again, another interesting set of insights from your group. It's really interesting to see how this is kind of all knitting together and setting out the complicated landscape that's there. Finally, in our last few minutes, can I invite Richard to introduce the last group?
Thank you, Karen. In our group, we were discussing back to the question on the existing arrangements for non-financial information reporting, the advantages and disadvantages. And I'd like to invite Azhar Ali to speak for the group. We had a very interesting discussion. Thanks, Azhar.
Thank you again, my honorable group members, to nominate me as a spokesperson. Okay, so our questions was related to identify the non-financial reporting requirement with the regulatory agency. So we discussed in a team, and we find that okay, there are a lot of non-financial reporting requirement is required to made in different countries. So it could be in different name, like in some countries it says like programmatic report, in narrative report, impact assessment report, value for money report, like anti-money laundering report, terrorist financing report, outcomes report. So this type of lot of reporting is required to submit it to the different regulators. So not only in central level and also in district and upazila level in Bangladesh, we need to submit a different type of programmatic or non-financial report is with the government agency. So in terms of and also there are others report what I already mentioned, maybe like outcome wise that indicators in Bangladesh or in other countries. In sometimes we see when we submit a project proposals to the donors, so financial information is less. Basically, first we need to submit huge non-financial information to the regulatory requirement. Without non-financial information, so financial information is not, it cannot be justified. So non-financial information is very much important to regulator to have the approval any project first, and later on maybe yearly basis, on quarterly basis, when we submit the financial report to the donor, so we need to incorporate our non-financial information with that report. Similarly, the regulator agency, like after intervals, so we need to submit maybe quarterly or 6 monthly or yearly basis non-financial reports. So in terms of like advantage, if we see that what is the advantage of non-financial reports, so as now we all are, most of the colleagues here is like accountant, we like the figure, but the non-financial who are the non-finance manager, they actually does not like figure or the amount. So they want to see that what was the really outcome for this project or for this NGO, or what is the outcome for this NGO in these years, how they have contributed like as an organization for the country. So this type of outcome they want to see in their report. So and then So the advantage is that if we submit the non-financial information with the financial information, this is a reconciliation tool that whether our financial information is valid or whether non-financial information is valid. So if we can reconcile both that, then we can get a real picture that, okay, which information is really more correct. So as an example that I want to give you, like in accrual basis accounting and cash basis accounting, when we prepare the non-financial information based on the accrual basis, like that, okay, event has been done. So in the non-financial information, we mentioned that, okay, this event, one event has been done. But when we prepare the report on cash basis, the payment has not been made. So in the financial information, we see there is no expenditure for this event, but in the non-financial information in program, they are saying that, okay, already event has been done. So we see that inconsistency because of our different modality of in our accounting systems, because someone is using cash, someone is using accrual basis, and someone is using the modified cash basis accounting. So if we want to really get the real advantage, that means we have to first that, okay, select the accounting system that, okay, and this should be accrual basis. Without selecting the accrual basis accounting, that if we provide the non-financial information on real-time basis, the financial information on cash basis, so these will not match. So, and this would be helpful that when we'll have the accrual basis of accounting. So in terms of other thing, in terms of, there is one questions like what the disadvantage in terms of, yes, disadvantage in the what I already mentioned that. So as we are using the different type of accounting systems by the different regulators, but non-financial information is only one systems, but accounting financial information in different systems. So we see the disadvantage, it is not matching, it is not serving the purpose as the regulator agency. What we want to see the organization as a whole, as a complete pictures, both the financial information and non-financial information should be matched each other, and it will say the real pictures of the organization. So so far I remember, so that there was a discussion. So if I miss anything, so I request my honorable members from my group that, okay, to participate the sessions and just add. Thank you so much.
Thank you very much. Again, a very comprehensive summary, and some new and interesting perspectives, particularly around the fragmentation, which is a bit of a theme that we've seen through this discussion. So I'd like to thank everybody for their contributions through the breakout groups. We're now going to bring the session to a close, and I'd just like to hand over to Sam to conclude this meeting.
Wonderful, thank you, Karen. So it falls to me to say thank you so much for your participation. It's been really stimulating and interesting to hear the range and the similarities and the different views and perspectives from the different countries. If you have anything you would like to follow up, please email me after the meeting, especially as this is the first of 2 sessions. If you have any feedback about it, please do let me know. I'd like to take a photo, if you don't mind. So if you're able to put your video on just for a brief moment and give me a smile, it will enable us to get a nice photo for social media. So I'll just count down to 3, and then you can give a smile. So 1, 2, 3, click. Thank you very much. That's great. So thank you again. Have a great day. And we look forward to seeing you next week on Wednesday at the same time. Thank you. Bye-bye.
Thank you so much for your contribution.
Thank you.
Bye.
Bye. Thank you, everybody.
Thanks very much.
Bye.